the Western mainstream media's coverage of the flooding in China continues to be either lackluster or complete and total garbage or non existent. So the flooding in China is absolutely enormous. China in Focus, the YouTube channel, which I've been following for a long time now, when it was a tiny channel, it's now over 500,000 subscribers on YouTube. Also Joshua Phillip, who has amazing sources. They are talking to boots on the ground. They are interviewing people inside China. They are getting leaked government documents about the global pandemic, how it's being handled, how it was blundered, and also the flooding and the collateral damage that it's causing. And it looks like, according to one of my top sources in China who just sent me some more information, a lot of crops in China are being devastated, are underwater, are destroyed from the massive amounts of flooding all over China. There's also droughts too. So not only is there flooding in many parts of China, and there's a lot of buildings underwater, and it's a complete and total mess. And the Chinese government's obviously not going to tell the truth about how many people died and the property damage. The poor people in China are not going to get compensated for the loss of their cars, loss of their farms. It's just, I've seen interviews with farmers who lost 50 acres of rice. It's just totally sad. But one of my top sources in China was just telling me he thinks that at least half of the crops in China, I believe rice is one of the main ones, is gone. So there's going to be enormous food shortages in China, and that means the Chinese government is going to have to import unbelievable amounts of food. Now, they had African, for those of you who are not familiar, last year, starting in early 2019, there was the African swine flu, and it devastated an enormous amount of the Chinese pork population. Well, apparently, and I've seen videos on China in Focus, a lot of livestock was also killed in the flooding. There's video, I just saw it on China in Focus on their newest video that came out about an hour ago, where there was cattle that was just wiped away in the flood. So I imagine that that's happened in a lot of different places. And I think China's going to have to import a lot more livestock as well as crops. So potentially the price of some food imports, the amount of food imports that China is going to have to bring in, and they were already importing an unbelievable amount of pork for the last 18 or so months, starting in early 2019. The amount of food in terms of staple crops. So normally China could feed itself with staple crops like rice and others. They didn't have to import nearly as much staple crops. They were importing a lot of pork and beef, chicken, fish, seafood. But the staple crops in China there was no shortages of those. But it looks like there's going to be big shortages of those in the not too distant future. And there is not only lots of flooding, but also droughts in different parts of China too. So there's a lot of distortions. Mother Nature is acting like she's pulling a lot of Keynesian economic levers, not in a good way. So one of my top sources in China is warning that people here in the West expect potential much higher food prices in the not too distant future. He is actually predicting that the Chinese government may go on a PPE equipment type of buying spree. So he's saying, remember how we found this information out that in December 2019 and January 2020 and February 2020, the Chinese government sent agents all over the West, here in the United States, Canada, Australia, the European Union, to buy up the best N95 masks and PPE equipment. Also, they prevented 3M and a lot of manufacturers from exporting the N95 masks out of China. Well, he is predicting that the Chinese government is going to go on a similar food buying spree. So a lot of crazy things happening in China. The U.S. is also a mess, but the mainstream media, again, here in the West, not covering it. Probably because the Chinese government doesn't want the Western media to cover it. Also because the election is coming up, and it's good for ratings for the mainstream media here in the West just to bash Trump all the time. Nonstop Trump coverage. Meanwhile, in the rest of the world, the problems in China are going to potentially cause you much higher food prices and potentially shortages. So we did have some higher prices of beef and some shortages for a short amount of time, but over the last 3 or 4 months when the pandemic was first getting going in the first 6 weeks or so, and that calmed down, thankfully. But we could have that explode again if my source is right about how much of the crops in China in terms of the rice and the other staple crops are destroyed. It's going to be a mess, which means that the Chinese government is going to have to import a lot more protein, animal protein, livestock, and also a lot more staple crops. Also, this story came out 5 days ago from Quartz by John Dietrichs. Hopefully I got that name pronounced all right. Chinese bank losses to exceed the U.S. and Western Europe lenders. The global pandemic is poised to set off trillions of dollars of bank losses, a large chunk of which are forecast to implode at Chinese lenders. Losses at global banks are projected to soar by $926 billion from $926 billion to $2.1 trillion through 2021. According to Standard & Poor's, almost $400 billion of that increase is forecast to come from Chinese institutions, compared with a $360 billion increase for those in North America. So Standard & Poor's is projecting larger banking system losses in China than in North America and Western Europe combined. While an impending wave of soured loans isn't expected to cause a credit crisis, the forecast demonstrates the economic pain that's anticipated from heightened unemployment and bankruptcies. China's outsized losses reflect the sheer size of its mammoth banking sector, which in terms of its customer loans is as big as the US, Japanese, German, and United Kingdom banking systems combined, say S&P analysts. So China's banking system is over at least $40 trillion. It is enormous. It has exploded in size in the last 10 years. Many people are not aware of how big the Chinese banking system is. The amount of credit, Kyle Bass has talked about this extensively when the mainstream media actually lets him on for a couple minutes to talk and doesn't interrupt him and doesn't ignore the stuff he was warning about with HSBC Bank a year ago in May 2019. So how much is HSBC Bank shares down? Over the last year, HSBC Bank shares are down almost 44%, minus 43.44%. Kyle Bass warned us. A lot of people, especially the mainstream media and Wall Street, didn't listen. Probably because HSBC Bank spends a lot of money running television commercials for their wealth management products. People ask me, one of my good friends who's a podcast listener asked me, how do I tell what's really going on in China? Because a lot of the stuff is so manipulated, even more manipulated than a lot of the economic data here in the US and other Western countries. And I tell him, well, one of the ways you can do that is you're not going to be able to see really the currency exchange rate is not going to give you proper signals. So it's 6.992 Chinese yuan to the dollar. You're not really going to see unless the currency just gets out of control. But as of right now, it's the Chinese government and the People's Bank of China has the currency exchange rate under control. You're going to see this with HSBC Bank shares. So one way, because HSBC Bank has so much exposure to the Asian economies, especially mainland China, mainland Chinese real estate, mainland Chinese businesses, Hong Kong real estate, Hong Kong businesses, Hong Kong banking sector. So HSBC Bank is probably a good indicator of the Chinese economy. Now, obviously, there's a lot of other problems with HSBC Bank, but the majority of their revenues, the majority of their profits are from China and Hong Kong. The other way might be the copper price. Now, the copper price has had an unbelievable rally since March 23rd. Round one, it bottomed around $2.08 a pound, just below that, according to the chart here on TradingView. And it's gone almost parabolic in the last 4 months. So it looks like it's rallied to over $2.90 a pound now, the copper price. So it's gone from around $2.08 a pound on March 23rd, right around there, to over $2.92 a pound. Still going up. Right now, I have the futures open in only 4 months. Now, the chart does look like it might be forming a double top. Could be putting in a top. And if the real Chinese economy, if things are going to be a lot worse, so there's a lot of evidence, anecdotal evidence, and China in Focus has reported on this. Joshua Phillip has reported on this. China Uncensored has reported on this, that there's a lot of smaller pandemic outbreaks happening again all over China. But if you add in all the flooding, the Chinese economy is going to have a lot of problems. So I would not imagine that the copper price, the stockpiling of copper by a lot of entities in China, is probably going to slow down, may stop a lot. So I could see, I'm not predicting this as 100% because there's not a lot of guarantees left except for taxes, politicians increasing taxes and trying to devalue currencies any way they can, and governments changing the rules. But I could see the copper price crashing again in the not too distant future. Time frame on that, maybe 6 months or less. But then what's to stop more intervention and then trying to get the copper price to rally again? The copper, in my opinion, the copper price has rallied way too much because the copper price is dependent upon the real economy, whereas gold and silver are different. Well, at least silver has its monetary component. Silver does have its industrial demand component, but gold is a monetary metal. It's not, the majority of gold demand is not from industrial purposes. Most gold demand is from central banks and investors and jewelry. Wow, a lot of people watching and hardly any likes. So please tap or smash the like button. Click, tap, or smash the like button. So I would look for an indicator of how bad things are in China. I would watch commodity prices because China buys a lot of commodities. They are the main consumer of commodities, the main demand driver of many commodities, whether that's copper, oil, coal, a lot of different industrial metals, and agriculture. So if demand for those drops, or if China goes on panic buying, let's say my source in China is right about how much of the crops have actually been destroyed and livestock. He says it's over half. That's his estimate. That's how bad the flooding has been. So if he is right about that, you're looking at much, much higher food and agriculture commodity prices in the months ahead. And it's going to affect people in the West here at the supermarket and at the restaurant or delivery if you're getting Uber Eats. Uber Eats or whatever, they're merging now. I think Uber just bought, I can't remember if they bought Grubhub or Uber Eats. These companies are merging. They don't make any money anyway. There's actually a really funny article about pizza arbitrage that Jim Chanos was sharing. It was hilarious. Okay, comments 2001, Lex Talanis. Every time we go to China, you're amazed at the low prices for Chinese produce. The imported stuff are simply too expensive for most working class people. Well, if the produce is destroyed, or a lot of it is destroyed, and I'm seeing video interviews with farmers, a number of farmers, saying their crops are underwater, showing that there was an entire field there, showing pictures of an entire field of corn, and the whole entire thing's underwater. It's destroyed. Or rice. So I've seen photos, I've seen video interviews with the farmers posting on Chinese social media, and then China in Focus and NTD are then playing them and translating them. It's just really sad. So it looks like the Chinese government's going to have to be importing a lot more food, which means the prices on that food for importing it's going to have to go up, which would be stagflationary. Because people's everyday bills are going to go up. If your food bill's going up and your income's not going up, even that just adds to the stagflation case. And China was already having stagflation problems. They injected emergency liquidity. It caused a stock market boom for 8 or 9 days. And then the stock market crashed after the Mike Pompeo speech. There was enormous amounts of net capital outflows. According to China in Focus, I haven't been able to confirm this with other sources, so if anyone finds any other sources for this, shoot me an email. That capital outflows in China reached a 4-year high, nearly $140 billion in net capital outflows from indirectly invested investment funds flowed out of China in just the second quarter. That's a lot of net capital outflows. Pablo asked, did the Three Gorges Dam break yet? No, it did not break yet, but supposedly they opened a massive amount of the floodgates, 9 or so of them, and they did not warn the townspeople in the towns right below the Three Gorges Dam, because then the Chinese government would have had to compensate them. So instead, they opened the floodgates, didn't warn the townspeople, their property was destroyed, apartment buildings and condos were washed away, and the Chinese government, the Chinese Communist Party, gets to say that it was a natural disaster while they opened the floodgates and didn't warn the people. And the people, I guess, there's reports that some people, we're never going to get a real number on how many people died, but there's reports that some people were asleep in their beds and they were electrocuted. They either drowned or were electrocuted. So from an investment perspective, I think copper prices rallied too much. If the Chinese economy gets worse, the demand for commodities is going to go down, except if my source who just sent me the information is correct, then China is going to have to import a lot more agricultural commodities, the soft commodities like corn and rice and livestock. But the other Chinese demand for commodities like oil and copper and other base metals, industrial metals, the demand for those may start to slow down a lot if this is accurate. So watch the shares of HSBC Bank. Kyle Bass was warning us. And we'll see what happens with the Hong Kong dollar, because supposedly what they have $400 billion, the Hong Kong Monetary Authority has $400 billion to defend their currency peg, but that one country, two system is gone. So we'll see what the Chinese government and the People's Bank of China decides to do with that $400 billion to defend the Hong Kong dollar peg. I'm guessing it might have been stolen already. Feral Android asks, can't they convert their treasuries to dollars? Yes, but that's only about $1 trillion, and there's a lot more dollar-denominated debt problems inside the Chinese economy, so that won't perfectly solve their dollar shortage problem. They actually need a currency swap, but there's currency swap lines. The People's Bank of China and Chinese government need currency swap lines, but there's no way they're going to get them in this political climate. We're in a Cold War. And then China dumping $1 trillion worth of treasuries, considering what the Fed's willing to buy, I don't think that's going to crash the dollar. I mean, you're going to hear the gold community talk about that, but it's not going to crash the dollar. Pames says the people always get screwed over by governments. Yes, I agree. It's not just the Chinese Communist Party, it's pretty much all government. If you study history, governments are brutal. Whether it's a king, whether it's a dictatorship, whether it's a warlord, the history of governments is very brutal. There's only been short periods of time throughout history where the governments actually behaved. And they did not last a very long amount of time before waste, fraud, corruption, and abuse. And then governments go back to screwing the people over. Certain parts of China have flooding. Certain parts of China have droughts. It is well documented. There's pictures and video all over the place. So just because you're in one part of China that supposedly the weather is fine does not mean that everything's being made up. Okay, well, I don't see any super chats here. I want to thank everyone for listening. Thank you very much to my over 1,000 Patreon account contributors. There is a lot of content behind the paywall. There's an audio podcast on Chevron's new potential acquisition. There's an updated dollar index chart that I just put out in the last couple days. Looks like there's still some support levels left in the dollar index. We'll see what happens. But the dollar on the dollar index is looking pretty weak. Still, I think a lot of professional money managers do not own a lot of gold and silver exposure yet. I think the majority of generalists, these large, big fishes, professional money manager types that have tens of billions or hundreds of billions in assets under management, I think most of them do not have that 1% exposure to gold or silver or precious metal stocks. And Eric Sprott has been predicting that they will add. I think the $2,000 an ounce gold number is a very important psychological number. And I was talking on Twitter yesterday about a Giffen good. And for those of you not familiar with a Giffen good, it is a rare good where normally with supply and demand fundamentals, price regulates supply and demand. So if the price of a good goes up, demand actually decreases and supply increases. But gold and silver may be rare Giffen goods where if the prices of gold and silver actually break psychological numbers, so if gold goes to $2,000 or over $2,000 an ounce and silver goes to 30 or 40 or 50, for silver, I think it's tougher to tell what number would be a psychological barrier. For gold, I think that number is 2,000. Dmitry Speck actually wrote a book, I think in 2013, called The Gold Cartel. And he is from Germany and has good contacts in the German banking and financial system. And he was talking about how the European Union politicians and ECB and technocrats, people at the ECB and technocrats were going crazy back in 2011 when the gold price was over $1,900, and they were calling the Federal Reserve and the U.S. Treasury to manipulate the gold price back down. So if you want to read more about that, it's in his book, The Gold Cartel by Dmitry Speck, S-P-E-C-K. You can pick it up on Amazon. The Gold Antitrust Action Committee talked about it, and the people there in Europe and at the Fed and Treasury were worried about gold getting to that psychological number of $2,000 an ounce. So that's why they pulled all those tricks. Back in 2011, they changed the margin requirements. They did a bunch of games to get the hedge funds and the people long futures contracts not driving the price a lot higher out of the market. So I think for gold, the main psychological barrier is that $2,000 number. Once regular people like Davey Day Trader and the Robinhood people, once they see 2,000 gold, they're going to get very interested in gold. Silver, it's tougher to tell what number is a psychological barrier, but I'm more convinced that it's $2,000 gold because that's what the people in power were saying in 2011, according to the book from Dmitry Speck, that the people in the European Union, the technocrats, the people at the ECB were terrified of gold hitting 2,000 and lots of people just buying even more gold. So they told the they called up the U.S. Treasury and the Fed, the Federal Reserve back then, and said, you have to knock the gold price back down. You have to manipulate it. So yes, it would be nice to see a little bit of a correction in gold and silver prices, but who knows what's in the short term, anything can happen. And we've been waiting. Many of us who've been in the gold and silver markets for 10 years or more have been waiting for a move like this. This is the move we thought would happen a while ago. Christopher says the psychological number for silver is 50. The Hunt Brothers number, you may be right. Okay, I have a super chat from Jonathan, who is also a patron account contributor, one of over 1,000, paying only $5 a month for a lot of content behind the paywall. There is over 100 articles, audio podcasts, and technical analysis charts behind the paywall for my patrons. Okay, why the stocks holding for GDXJ and SGA are completely different when they are both junior ETFs. So they're juniors only in name. Because there's so much interest in by high-frequency trading hedge funds in trading those and day traders, that they have to add larger and more liquid stocks. So if you look at the holdings for like the SILJ, which is the Junior Silver Miners ETF, it used to only have smaller, more illiquid stocks with lower trading volume years ago when my friend Andrew Chanin first started it. years ago with pure funds. But now if you look at the holdings for SILJ, it's got the older, smaller producers like Coeur d'Alene and Hecla, which are not the largest silver miners. They're old silver miners, but they're kind of mid-tiers. So they're called senior producers, but they're more of a mid-tier. They're nowhere near production levels like a Fresnillo, which is the world's largest primary silver producer. I don't think they're anywhere near the Pan American silver levels. So like the holdings for these ETFs that are claimed to be juniors, a lot of them don't actually have juniors in there. It's for liquidity trading purposes to help the hedge funds and the high frequency trading professional traders, day traders. So that's why they put the larger, older stocks in there. If you want real exposure to juniors, the Sprott Junior Gold Miner ETF used to have more juniors. I haven't looked at the allocation recently, but it does change. The Sprott Junior Gold Miner one, SGDJ, I think is the symbol. So that they're supposed to update their holdings frequently. Okay, super chat from Dominique Nieto. Thank you for the $5 super chat. Well, $4.99. If you are not in miners yet, the best to get in now, or wait for a pullback, or partial now and hope for a pullback. In my opinion, I think it's good to have at least somewhat of a position, but I would not buy the majority of my positions at these prices. I would hope for a pullback. And I don't buy all my positions at once. So if there's a pullback, I buy some. If there's a larger pullback, I buy more. That's how I accumulated a lot of Sandstorm Gold shares over the years. So when Sandstorm Gold crashed down to, I had some shares of Sandstorm Gold, a decent amount of shares, and then it crashed a lot in 2015 and 2016. And I was doing my homework. I was speaking with management. I was listening to the conference calls. I was looking at the assets, the deals that they were doing, and projecting cash flows. And the stock, like, everyone hated it. People on Seeking Alpha, there was probably a dozen articles about that they were going to go bankrupt, and I bought a lot of shares. And I said, if I'm right, the shares are going to go up a lot in a few years. And that's what's happened. I don't know if there's going to be deals like that. I think a lot of capital is rotating into juniors right now. I think the juniors, the higher leverage, higher cost, more debt on the balance sheet miners, and the juniors are starting to outperform on a relative basis safer companies like Sandstorm Gold. Okay, excellent super chat question from another Patreon account contributor, Dmitry Shmerkovich. Thank you for the $10. So my friend Chris, who covers the silver market, I interviewed a couple weeks ago. He interviewed Andrew Maguire recently, and Andrew Maguire is involved with providing information, I think, for the U.S. Department of Justice, the RICO case against the J.P. Morgan metals traders. And Andrew Maguire is claiming that the U.S. Department of Justice, people that are prosecuting the RICO case, and as of now, from what I've heard, they're still moving the case forward. They were told that, the U.S. Department of Justice people told the J.P. Morgan to reduce their silver short position. So if that is true, that means they're not gonna be able to play as many games to smash silver. So if that is true, then silver has less of a blockade stopping it to $30 or $35. So we'll see. They could always change the rules. They could always come up with new ways to get around the regulators or the prosecutors. I've been in these markets, and I'm using air quotes because the gold and silver markets are so heavily, the paper markets are so heavily manipulated for over a decade. So I'm sure they can come up with new rules changes or new ways to slow things down. But yes, I am very surprised they haven't smashed things. So I think, Dimitri, to answer your question, I think it has to do with the U.S. Department of Justice, the RICO case. Because over the last 2 years, there's been a number of lower and mid-level traders, precious metal traders and managers arrested. And the U.S. Department of Justice is still supposedly moving the case forward. Now, if they come out with a press release saying that they're dropping the charges, I would suspect then that the manipulation will go back to normal levels pretty quickly. But I have not seen anything saying that the manipulation... Oh, Chris Marcus is my friend's name. My bad. Sorry, I'm just it's late at night, getting tired. I interviewed Chris Marcus about his new silver book in the last couple weeks, so you can go back into the archives if you're new to my channel or miss that interview. He has a new book out on silver where he actually spoke to Bart Chilton, one of the CFTC commissioners, who admitted that gold and silver are manipulated, but said the other people at the CFTC wouldn't agree to it. So you needed, I think, 3 out of the 5 CFTC commissioners to admit that it was manipulated to start prosecuting and going after the manipulators. And clearly that wasn't going to happen because at that time with that silver investigation, that silver price investigation, guess who the head of the CFTC was? Gary Gensler, who was a former very high up at Goldman Sachs. And he was involved, Jim Rickards, according to one of his books, said that he looked through trades on long-term capital management and copied a bunch of trades. And then also, Gary Gensler, in 2016, he was Hillary Clinton's campaign finance manager. So I don't think he believes in government transparency and ending corruption because literally he was Hillary Clinton's campaign finance manager in 2016. And he was the head of the CFTC during the silver manipulation investigation. So yeah, I am surprised there hasn't been as much intervention, but the people in the silver market who pay more of attention to this than I do they believe what Andrew Maguire is saying for now. Okay, everyone, thank you for listening. The articles will be in the information and description section, so if you want to see more of the Quartz article, also have an article from Bloomberg News about panic selling gripping the Chinese stock market after U.S. tensions worsen, and then a Bloomberg article from a few days ago about Kyle Bass copycats snapping up bearish Hong Kong dollar call options. Also, I highly recommend listening to Mike Pompeo's speech about how U.S. policy is going to change against the Chinese Communist Party and the Chinese government. The speech was supposedly written by a Chinese dissident, someone who was in re-education camps and eventually got out. So I highly recommend listening to Pompeo's speech. Now, it is just words, and I judge people by their actions more than their words, or if their words match, or if their actions match their words. But the words sounded pretty good. They were written by a Chinese dissident. So we'll see what happens. Now, if Joe Biden wins the November election, I think he's on the Chinese government's payroll. So all of this talk about standing up to the Chinese government, that could end very quickly if Joe Biden wins the election.